Welcome to Anafram Market Perspectives.
Anafram Market Perspectives, Friday, July 25th, 2025. Welcome back to Anafram Market Perspectives. It's Friday, July 25th. This week saw a mix of earnings beats and macro uncertainty, with Alphabet shining, Tesla stumbling, and tariff headlines keeping investors on edge. Let's unpack the highlights. S&P 500 weekly recap. The S&P 500 gained 0.7% this week, hitting another all-time high, buoyed by strong earnings and optimism around potential tariff resolutions. Tech led the charge again, while autos and some defensive names lagged. Among the winners, Alphabet rallied 4.68% after crushing earnings expectations, lifting the entire communication services sector. Amazon rose 3.73%, continuing its momentum from strong retail sales data. Alto Networks surged 2.49% as cybersecurity concerns returned to the headlines. Lilly jumped 5.77% after reaffirming strong guidance. On the loser side, Langus plunged 4.42% this week and dropped 8.2% Thursday alone after a sharp earnings miss and CEO warnings of difficult quarters ahead. Netflix fell 7.33%, giving back last week's gains. eFance BM declined 7.62% following a disappointing revenue forecast. COMAG cratered 13.3% on weak comps and a reduced sales outlook. Despite these dips, the S&P held firm, reflecting market resilience heading into a dense earnings calendar next week. Tariffs and trade update. Markets remain laser-focused on the August 1st tariff deadline. President Trump reaffirmed that tariffs of 15% to 50% will hit nations without trade deals. This week, 15% tariff deal was finalized with Japan, boosting hopes for a similar agreement with the EU. However, negotiations remain tense. The EU has authorized 21 billion euros in retaliatory measures and may restrict U.S. investments. Canada and Mexico, despite earlier exemptions, face 35% across-the-board tariffs come August, as Trump escalates rhetoric on fentanyl and trade imbalances. Meanwhile, the China tariff truce may expire August 12th if no final deal is ratified. Command also threatened to dissolve the Delta Aero-Mexico alliance, citing unfair advantages granted by Mexican aviation policy. Tensions with Brazil also escalated, with the country facing 50% tariffs unless political frictions subside. Trump called these levies non-negotiable. With 100-plus S&P 500 companies reporting next week, including Microsoft, Intel, and Coca-Cola, volatility around trade rhetoric is set to collide with corporate results. Economic data recap. This week's data revealed a mixed but resilient global economy. United States. Initial Kazakhstan. Initial jobs, 2.8 million jobless claims, 217K versus 227K expected, a sign of continued labor market strength. Vice's PMI jumped to 55.2 from 52.9, and the composite PMI rose to 54.6, both strong expansion signals. Excessive home sales fell to 3.93 million, reflecting tighter housing conditions. Building permits remained steady at 1.393 million. Canada. Retail data was split. May sales down, minus 1.1%, but a 1.6% rebound in June suggests consumer resilience. Federal Materials Price Index soared, plus 2.7%, pointing to upstream inflation pressures. Europe. Eurozone PMIs beat expectations, with the composite PMI at 51 and services PMI at 51.2, a clear expansion. ECB held rates at 2.15%, noting stable inflation but monitoring U.S. trade risks closely. Asia. Japan's Jabun Services PMI came in at 53 million, beating estimates and showing post-holiday momentum. China held its loan prime rate steady at 3%, signaling a wait-and-see approach as global tariffs loom. VIX Volatility Index. The VIX closed at 18.10, barely changed on the week. While volatility remains muted, sentiment is cautious. Markets are riding high on earnings, but bracing for August turbulence. A breakdown in U.S.-EU trade talks or a further escalation in the China tariff situation could quickly elevate fear levels. Bonus section. ETF and stock picks review. Let's review the picks from Monday. ETF, QQQ, Invesco QQQ Trust. AVLIV $508, nearly flat on the day. Expulsivane shows price above the Ichimoku cloud, with MACD maintaining bullish momentum. Tharoshi trend remains intact, supported by strength in big tech names, though momentum is slowing. Stock, Alphabet, GOOGL, closed at $192.20, up 1.0%, continuing a strong week. Koito earnings crushed estimates, $96.43 billion in revenue versus $93.9 billion expected. Cloud growth and ad recovery fueled a breakout above resistance. MACD is slightly bullish, and Ichimoku confirms support. With strong AI tailwinds and momentum, this remains a leader. Stock, Tesla, TSLA, closed at $305.12, down minus 8.2% Thursday after an 11.8% drop in Q2 revenue and cautious guidance from Musk. Tuong chart shows the price below key Ichimoku levels with a bearish MACD. Losing U.S. EV tax credits also weighs on margins. This name is vulnerable in the short term, despite long-term AI autonomous potential. Investor takeaways. This week's rally shows earnings still drive sentiment, but tariffs are back at center stage. Alphabet reminded us that big tech remains king when growth accelerates. Economic data suggests that the US, EU, and Canada are holding steady for now, though risks remain. As we head into the final week of July, stay selective and prepare for potential tariff-induced swings. Focus on quality names with earnings momentum and macro resilience. Thanks for tuning in to Anafram Market Perspectives. We'll be back Monday with a fresh pre-market update, economic calendar, and new ETF and stock picks. Until then, stay informed and stay ahead.
Thanks for watching. If you found this valuable, hit subscribe and share this with others. See you next time on Anafram Market Perspectives.